Hey folks, it's Simon here with your Tao Daily video for the Labor Day long weekend. Markets were stronger on Friday. We had some benign PCE inflation data and consumption data, which is certainly keeping interest rate cut hopes alive and well for the FOMC meeting next month on the 18th of September. You can see here the S&P is hanging around at all-time highs. It didn't quite make the new high, but we're within a whisker of it. The same cannot be said for the NASDAQ here. All right, the NASDAQ is still a little way away from its highs and is looking a little more bearish. Now, if we look at what have been the major contributors to the strength, so this chart here, you can see the S&P over the last month was up 3.5%, so pretty strong month in the end. Now, all of the sectors above the S&P are the ones that are outperforming. So we've got industrials, which is cyclical. We've got healthcare, which is defensive, consumer staples, which is defensive, financials, which is more cyclical, real estate, very defensive, and utilities, very defensive. The sectors that are lagging are communications, which is kind of growthy, basic materials, which is cyclical, XLK technology, which is growthy, semiconductors, which is cyclical and growth, consumer discretionary, which is cyclical, and energy, which kind of just dances to the beat of its own drum, depending on what the oil price is doing. But you can see that the sectors that are outperforming are the sort of sectors that are going to be far more helpful to the S&P and the Dow, and frankly, not that helpful at all to the NASDAQ. So if we have a look at the Dow just quickly, that actually did make a new all-time high on Friday. That has very quickly gone from laggard to leader. Of course, September is a new month. Whether we continue to see rotation out of tech and into those more defensive and cyclical sectors remains to be seen. But also bear in mind that from a seasonal perspective, September is actually the worst month on the calendar for the S&P 500. So bearing that in mind, sectors like utilities and consumer staples are probably not bad places to hang out. Just another quick check-in with dollar yen. This is looking like it's forming a bit of a base here. Now, one thing I would point out is that dollar yen hasn't checked in with its mean since way back on the 11th of July. So it's probably due, it's probably overdue to at least check in with that, and then it becomes a case of really assessing progress beyond that level. If it fails here and falls back down, we take out that low, we could see some renewed panic. But if dollar yen can continue to make upward progress, that's generally going to be supportive of risk. That's what I got for you folks this Labor Day long weekend. We are having a sale on, so if you want to grab one of our programs or some of our indicators, you can save 30% off the regular price up until Tuesday. That's what I got for you. I hope it helps, and I wish you an awesome long weekend.